Hello, ladies and gentlemen. Welcome back to my channel. And it has been a long time since we have met, and I have discussed which are the best stocks to buy. Also, today we are going to talk about different sectors, about monsoons, RBI policy, then industrial production, inflation, index earnings, and your favorite, that is top stocks for August month, or you can say that the best stocks to buy in the month of August for a particular period of 12 months holding. So let's go ahead and building optimism amidst caution. So you know that previously in the past 6 months, maybe the stock market was going in a downtrend, and it has given negative 10% returns. And after 3 months of downturn, our benchmark, that is nifty as well as sensex, is bounced back with 8% in the previous month, that is July. And these are the specific sectors like metal, reality, capital goods, FMCG, and banking index that has given double digit returns. And also our FIIs, foreign institutional investors, have sold um, this particular amount of stocks in the open market. And mostly I can say that previous month was like the less dumping that has happened. Mostly the average stocks that are they are dumping was around this value, or 20 to 60 crore. But previous, they are, I think they are more interested in retaining uh, in this market. So let us discuss about the rains. I think the monsoons also have a very good effect on our markets. For that particular fertilizer industry, jumble fertilizers, deepak fertilizers, and so on, mostly there was very excessive rains across central, northwest, and southern India, while it was the weakest in northeast. And mostly oil seeds acreage was 0.8% higher at 1.6 hectares. So this is our achievement. And pulses acreage was 1.1 crore hectare, 2% higher than last year. And also our reservoir levels have also increased, so we have surplus water storage. And when we come to the industrial production, in all category we have achieved positive growth. Consumer durables, when I say consumer durables, you can look into Whirlpool, then Amber Enterprises, Dixon Technology, and it has been increased by 58% because they are doing contract basis manufacturing. Also capital goods are like AC, and you can go for Tata Voltas and those kind of stocks, some kind. So and actually in previous month, June 22, uh, it was like with a lower pace of 12.7% against 18.1 in May. So this previous month has not done so well. So that is also a sign of caution. And when I talk about inflation, I talk about CPI inflation. If you don't know the term about CPI, I have given a brief explanation in other videos, you can check. I will make a totally separate video on how to read a research report, and I will give all the terminologies in that. And it was like flattened out for the last month, and our inflation was 7% versus May. May was 7.4 and June was 7.1. So also we expect that inflation will gradually come down to 4.5% by March 2023. So this is just a expectation by calculation, and even it will, I think, continue hovering around 7% till September. So we can see that our expectation is 4.6, uh, and this can be achievable till we can say March 2023. Till then, to calm down, we have a way long to go. And to control the inflation, there has been a RBI policy meet, and I am going to explain what has happened over there. So we have the MPC committee, Monetary Policy Committee, and on Friday they raised the repo rate by 50 base points to 5.40%. Why? So the funda is very simple. Repo rate means the rate at which central bank lends to private banks or commercial banks. So repo rate is the lending rate in which you can say easily, like how commercial banks borrow from the central bank, that is RBI, and the repo rate is above pre-pandemic levels of 5.15%. And why they have done this is like from 5.15, like from 5.15 it has increased to 5.40%. Why and what is the logic behind? So to control the inflation, high interest rates will suppress the demand in the economy and helping to track the inflation. So why this is happening? For example, we have 7% inflation. There is inflation because people have the purchasing power and they will keep on buying, and when there is demand, also the producers who are there will produce whatever the demand is. Expectation fulfillment means whatever this demand is demanding, they will produce such kind of goods. Now in order to control this, now producers may not have all the capital, they need to borrow the capital from the banks, and the banks will borrow from the RBI. So in order to control the production, then so the interest rate has been hiked to 5.40%, that is 0.50% has been increased. So I hope you understood the logic. Now here I am going to reveal the earnings, future earnings. This is the prediction. Now currently our Nifty is trading at 21.3 times of FY 2023 earnings, and along 8.4 times of FY 24 earnings. And our expectation is like Nifty 50 index net profit will go approximate 10% by FY 23 and approximate 15% by FY 2024. So 15% in FY 24 and by approximate 10% in FY 23. And EPS is like the earnings divided by outstanding shares. So I will explain this in another video. We can see that it is like 806 for FY 23 and EPS of 932 for FY 24. So this is going to increase in FY 24. So now it's time for the stocks. It's time for the stocks. Ooh. So have a look at this. So the best stocks to buy and hold is Axis Bank, ICICI Bank, Infosys, M&M, and then RIL, Reliance, Sapphire Foods, SRF, Supreme Industries. So these three are like mid cap and small caps in between. So I think our Nifty is in a good rally. I cannot say it's a rally, but in a good uptrend. So this year might be profitable for us. And I have that. I have the PDF. Excel I have. Let me show you that Excel. Okay. So this is the thing. So like we have Axis Bank, ICICI, Infosys, this Mahindra, Reliance, Sapphire Foods, SRF, and Supreme Industries. These are the returns that you can expect from this. You have to buy all this 1 2 3 4 5 6 7 8. You have to buy all these 8 stocks, and if you buy all, the risk is 7% risk and 18% returns. So I am going to tell you one efficient way wherein you can reduce the risk. Let me put this ink off. Okay, so it is the holding is for 12 months. Why the ink is lagging? For 12 months, and the expiry that you can take is 30 March. 30 March, and you can buy at the money that is 17,000 for a premium of 726. You can buy for a premium of 726. So I will show you the calculation. 726 into 726 into 50. You just have to see, you just have to pay 36,300 for your premium, or just as in the insurance. In case market falls by, let us assume market falls by 3 or like 5%, and let's take final 5%. Like it falls by 5%, then the premium that is like 600 will become 1012, like that it is. So this digit is going to get double, so it will be like 1200 into 50. If market crashes by like 5%, and all this premium will keep doubling, and it will like 12 plus another 6, like 6 7 8, like 1800. So like that it is. Let's clear this. I'll show you. In case stock 200 multiply by 50, like 60,000. So in case the market falls, you will make 60,000 profit. Put the ink off. Now this thing will only work, and if you invest somewhere around 10 lakh, 10 lakh or 15 lakh, This is how it works, and you can come to know how many quantities or how many lots to hedge, like 17,397. So 17,397 7 into 50, so that value comes to 8 lakh 69 850. So if you're investing somewhere around 15 lakh, we need 100,000 and a lakh 10 lakh, okay, 15 lakhs by 8 lakh 6800. So you have to buy only one lot, so you have to divide your fund, or fund means the capital, divided by 8 lakh 6800, the amount of value that we have got. Oh, let me explain to you stock by stock, like why you have to buy this, why this all portfolio, and you have to buy also one put option to hedge. Okay, first we have is Axis Bank, and you can see that the target is 960. And why we have to buy is that we have an expectation of approximate 90% earning growth mean, aka also known as profits, and also 90% decline in provisions. Thank god we have to do less provisions now. And net interest has improved by 10 base points, and fee income, just this is the sad story, that they are looting, banks are looting their customers by charging some high fees and all. Not now. Okay, and the provision is by just 10 basis point, and the asset quality is also not showing any sign of concern, so it is not giving so importance. So our bank is well positioned for re-rating. This re-rating will be given by CLSA or JP Morgan. And our we reach at this fair value of 960. Of that, 2.1 times of June book is that they maintain their bank book. And what are the positives, and how do we come to know that we will achieve that target? Because our loan growth was solid, that is 14% year on year, deposits grew by 13% year on year, and savings account also has increased from 15%. NPA is non-performing loans that they have become bad is just by 4% quarter on quarter. And also NPL ratios are declining, and things are coming in our favor, so we have to buy. The second one is ICICI Bank, and our target is 975, fair value of 975. Why should we buy is that there is approximate 60% decline in provisions and 50% increase in earnings is our, also known as our profits. Return on equity best in class, and bets for all metrics operation. And you can know that ICICI Bank has improved by 2%, and bank is well placed to justify premium valuation. This is little bit expensive, I guess. And buy rating is also given, and also at this 2.6 book value. Our positives is that the credit cost is at zero, but they also have a contingency buffer. A loan and net interest income solid at 20% year on year growth, net interest 4%, income growth also 30%. Let us go to the next. We have Infosys, tech giant, and we have given a target of 1690, approximate 9% high from the current price. Now why should we buy that? Strong revenue, also they have a very good client pipeline. They might have a weak margin, but they have increased the unbilled revenues. All these things are mentioned in the other video, you can check. Like EBITDA margin also, this I have explained very briefly in that other video, you can check. EBITDA margin is like 21 to 20% band, but Dalmia, this company is going to be in focus because they are going to have a deal with Infosys. And revenue growth has also increased for FY23. EPS will also increase by 7% to 15% in the upcoming years of 23-24. We achieve at this fair valuation after 25 times of FY 2024 earnings. What are the positives about this company is that 5% quarter on quarter revenue growth, has a very speakable capabilities and wallet share, and also good market share. And client metrics have increased by $5 crore clients, by 5 on quarter. So the negatives are EBITDA margin has declined by 20%, 80% base point than our estimate what Kotak had given. And margin or loss in Dalmia will be a surprise. We are talking about Mahindra, and Mahindra, it is a buy on our target price is 1400, fair valuation 1400, and it will go 20% up. And why we should buy it is because um this particular company has invested in Mahindra and Mahindra into the electric vehicle passenger arm, and this will focus on production of electrical SUVs over the coming years. And for FY23-25 EPS estimate will be 9 to 12% on higher volume assumption. We expect EPS to grow by 33% for 23 and 19% for 24. And what are the positives? The positives is that Evico means electric vehicle company, is like a leverage for Mahindra for the existing capabilities for the production of EVs. And they are only focused on electrical SUVs, and order book will remain strong for this particular passenger vehicle. And recently they have launched Scorpio, and it will start booking on July or 1st August onwards. And the negatives is that the standalone gross margins are expected to go down. And for Reliance Industry, it is a good buy for 2980. It will go 19% up from this level. Why we should buy is the EBITDA will improve, and also the O2C as well as Geo and their petroleum refinery, that is their previous business, also the upstreams and volumes that will realize very high, and also the outlook remains very robust. Geo is very ahead of our expectations, and it has really hiked their tariffs. And EPS will be 24% for 23 and 24, that is 19% in the year 2024. And we come to this fair value, and our positives for this company is exploration and production, that is like 2.3 times of the quarter on quarter ahead of our estimates. And also Reliance EBITDA has moved 9% quarter on quarter. Geo EBITDA was like 4% quarter on quarter. And the negatives is that the EBITDA 21% quarter was below our estimates, that is 9%. And O2C, that you will see in other video what is O2C, EBITDA was like below 41%. Approximate 14% debt has increased by 22,800 crore. Sapphire Foods is a very food chain franchisee business of Yum brands in Sri Lanka and Maldives. Also expansion in India with the EPS of 17.4. Their target price is 1,425. Let's move ahead. Not now. And the EPS will be like 17.4 times FY23 and 25 times in FY24. We reached at this particular valuation of 1,425. Positive side will add new 179 KFC stores and 160 Pizza Huts shortly, and also their operating margin will increase 13%, and their capacity requirement very small, max 300 crore. Let us go to the negatives are due to economic slowdown and some consumer preference will go towards healthier option because this is fast food chain, and there can be a very breach in the franchisee agreement. Okay,